Yo, it's Hublo back with another video. So today we're going to be going over mastering Fibonacci. This is definitely one that I wanted to give y'all. Been getting a lot of questions about how I use my Fibonacci. Do I use Fibonacci? And the answer is yes. I'm going to show you guys how I do today. So we're going to go down the list of what we're going to be covering today. So we're going to be covering understanding Fibonacci retracement, why it works, how to measure Fibonacci retracement correctly, using Fibonacci with order blocks for precision entries, best time frames for applying Fibonacci retracement, and how I use Fibonacci daily and why it works for me. So understanding Fibonacci retracement and why it works. So first we have the 0.236. This level indicates minor price correction and trends. We have the 0.382 and the 0.618. These zones often signal strong reversal points in trading, and a deeper pullback, which indicates the 0.764, is a potential trend exhaustion or reversal. So we have also the 50%. Institutions frequently target this level for strategic entries. So the 50% is definitely something that is institutionalized. A lot of institutions use it in order to get a discount on price. And these are the core Fibonacci levels that are not only on my charts, but are used worldwide in order to, get a discount on price. The strongest retracement zones. So Fibonacci levels attract traders. Traders focus on Fibonacci levels for potential price reversals. Price reversals confirm effectiveness. Past price movements validate Fibonacci retracements and predictive power. So it always allows you to predict somewhat of where price may retrace to, so you can get a better entry, which gives you a better stop loss, which gives you ultimately a better take profit and risk to ratio. How to measure Fibonacci retracements correctly. So the first thing you're going to want to do is you're going to want to look at your chart. You're going to go from the last big down candle, if you're looking for uptrend measurements, looking at the last down candle before the uptrend. So identify the last major down candle before the uptrend. How would you measure that? You would measure the candle from bottom to the highest price. So you just measure it bottom from the highest price, and you'll be able to get that 50%, that 618 that you're looking for in order to execute. This is a downtrend measurement example. You would use the last up candle for bearish movement before the downtrend. So you would go from the candle high to the candle's low. So that's how you would measure that one, and it would give you a cross so you can be able to see the 0.5 and the 618 in order to execute. Using Fibonacci with order blocks for precision entries. Uptrend example. So the last bearish candle indicates potential reversal points, low to high of trend. Measure the trend from the lowest to the highest points. And for entry purposes, you would use the 0.5 or the 618 retracement levels. These levels help identify optimal entry points for trades. This is another downtrend example. We have the last bullish candle indicates potential reversal points, trend high and low. Measure the distance from high to low for accuracy, 0.5 to 618. These levels often signal strong reversal opportunities and trading. Best time frames for applying Fibonacci retracements. So time frames that I usually use, it would be the 1 hour and the 4 hour. Those are, but in between that, I usually use the 2 hour. and more frequently lately, I've been using the 2 hour and the 4 hour. Now, if I'm looking for a swing trade or I'm looking for a price is going to go over a long period of time, I would use the daily. But for intraday trading, it would be the 2 hour, 4 hour. Those are big areas where I use so I can catch a good swing trade for the week. Um, these charts reveal significant Fibonacci levels efficiently and effectively. Swing trades and levels. Institutions often utilize Fibonacci for strategic swing trades for entries. So the 15 and the 30 minute are also time frames that I like to execute on when price gets to my specific 618 or zero point 0.5 levels. You also want to utilize the 5 minute, the 15, and the 30 for those entries and wait for that break of structure in order for you to see exactly when it's time to execute. So these time frames enhance the precision in those entry points that I explained previously. How I use Fibonacci daily and why it works for me. So lines zero point 0.5 and 618, I use these lines at these levels for precision, price reaction, and confirmation. Observing price behavior confirms my Fibonacci my Fibonacci strategy and effectiveness. So what I mean by that is that I've back tested this through multiple pairs, through different, um, commodities, indices, you name it. It works. It's precise. It's has a very great precision, and just like I explained before, uh, though that's exactly how to use it. And I'm going to show you guys another example on the charts on how to use it as well. Um, if you've liked this video, if it's helped you, or if you want to, you know, learn more from this video, I definitely would advise you go back in the video and take notes because it definitely could help you grow in your trading just by and helping you remember it a lot better if you go back in the video and take notes on this video. So why it works for me. So refining entries. So I remember when I was a beginning trader and I didn't know how to really refine my entries. I would think I would know where to get in, but I would get in at too high of the market or too low of the market, and it would put me in a lot of drawdown. And when I did get a good finite area of where to get in using support and resistance and stuff like that, it still wouldn't give me optimal entries that I wanted. So Fibonacci levels help pinpoint optimal entry points in trading. So as long as you use Fibonacci, it allows you to get a specific area where you would want to specifically execute your trades. And again, thanks for watching. This is definitely a very big step because you've got all the way to close to the end of this video. We are going to move over into the illustration on the charts, but I just want to thank you for taking your trading journey seriously. Again, if this video has helped you, like, comment, subscribe, and we're going to move on over to the illustration. So the Fibonacci retracement. So you would just go here to the Fibonacci retracement. You would want to heart it, of course. And then once you open it up, kind of like this, it'll give you a setting. So once you go into settings, you'll go to visibility, and you can go to style, and then you would just copy these settings. So pause the video right here and use these settings to place into your Fibonacci. Make sure you're placing them in the same area. So 1, 2, 3, and then skip a space, put the 618 right here. You can put these whatever color you guys want. As far as your 50% level, mine is yellow. But make sure you're placing these exactly in the same that I have them here. No trend line, no extended lines, anything like that, because that kind of like makes it go all the way across your chart, which you really don't want. And then you can put the background and make sure it's just like that. So then it's transparent on your screen and on your chart. And then, price, levels, text, make sure everything is exactly how I have mine, and I have my font at 12 because I don't really need it that big. And then make sure you have this unchecked, and then you can create it as a template there. So once you do that, you can just create it as a template, save as, and then you'll be able to save as, and then I put mine as Fib1. So that's kind of like what I name mine. But once you do that, it's going to save it as a template, and you're going to be able to use that as your official Fib. And then you'll just click OK. So from there, you're going to be able to Fib. You're going to have the Fib that I exactly have, and you're going to be able to use that to your advantage. So let's go over to the example. So I had a buy example for you guys. So this is where it's at. So let's just say we were currently trying to get into a buy position, and we were, looking at the markets to possibly do that. From here, we can definitely see before this up move, we had this last down move that we had. So you can use the 1 hour, 2 hour, or the 4 hour, but I would most likely use the 2 hour for this specific example, because this whole area is an area where I can see price can come back to. Now it did kind of fill price here, but price can always still come back even into this filled area, even though you saw price kind of come fill this area and then take off. So sometimes you could just do the last down. Sometimes I like to do just the whole entire down move here, because it gives you just a little bit more of a precise entry on exactly where you want to be, but both works. I don't know why my white line doesn't always show up here, but I think that's just a glitch in TradingView. But usually I would just place that here, place the top of my line here. So from top to bottom, again, I'm gonna do that for you guys from bottom to top. So make sure your white lines, you start down here and you end at the top of the candle. You kind of drag that out this way so we can get a good example of what that looks like. So let me do that again for you guys. So from here down, and you're going to get that 50%. So that yellow is that 50% area. So usually, so that's not all in my way, I'll put 50% on my chart. And all you got to do to get that is you would go to the horizontal lines here, horizontal line here, same thing like that one. You would click on it, go to settings, and then all you would have to do is, put text 50%, and then you would just create a template, and then click OK. So that's how you could, get rid of that on your chart while, price kind of like plays out. So you kind of play price out real quick. You kind of see price came to this level. And let's just say we came to this 50%, we bought there. So let's just back it up just a little bit. Let's see. So let's just say right when we came into the 50% area, let's go to the 5-minute and drop down. Boom. So let's just say we bought right here. And now you're going to continue to see price play out. And price eventually ended up, continuing that buy and continue to, go up from this 50% level. And if you had your SL below that last structure, you would have been golden. So like I said, using these Fibonacci levels can really help you, in your trading and help you really get those precision entries that you're so desiring. And like I mean by like the stop loss, your stop loss can be under here, and then you just target, a high, target a high, and you can kind of just go from there. Kind of just go from there, and that would be, a buy example. So a sell example is kind of like the trade that I took today. I'm about to show you guys right now. So for this one, again, we got the last up candle before the down move. So from here, I ended up analyzing from bottom to top. See, you got the 50% in there. I made that a POI area for me, a point of interest area, and we put the 50% there, so we can delete that. And as you can see, 50% came directly to that area. We're still in this as we speak, but we're currently definitely seeing, price reacted off of there and continued to go down from there. So price reacted directly in there. I did, activate it with a little bit of patience. And I got in here originally, because I thought it was going to definitely sell down from here, but it ended up retracing up. And then once I hit the 50% area, I ended up getting in another position here. So, since then, price has just been consolidating as we went from New York session into, Asian session. And now we're about to get into London session in a little bit here. And right now it's pre-London. So, we'll kind of see, what happens with this trade or if price continues to keep this level and continue to probably go down. US 30 definitely, went down already. And we was in that as well in the funded account. So, it is what it is. But definitely, like I said, these key levels are definitely, areas in price where you can definitely get that good tap into. And just from that alone, just from that initial push down, if you would have even just caught it up here, that was 65 pips. So that was definitely, definitely a move you could have caught very easily just off that pivotal point, had your stop loss above structure on the higher time frame. So above structure, this last structure up here, have it up there. And like I said, you should be golden. Mine is not above structure. It's kind of below like the structure that's creating. But I know if it kind of blasts up here, especially with Nas, it's usually going to, play up here a little bit. So that's why I have my stop loss so tight. But that's just to give you guys a brief example of how to use it and how to go about, using the Fibonacci correctly on your charts. Again, I'm Hugo, and I'm out.